Float like a butterfly. That's what Muhammad Ali said. And so it is with new records once again. U.S. stocks continued to rise on Friday, which added to Thursday's record closing highs. Investors appear to be encouraged by relatively strong housing market data in December and with China's better than expected industrial production. But should we believe the Chinese? We also found out that the Treasury Department will issue a new kind of bond product. And President Donald Trump plans to nominate two new members to the Federal Reserve's Board of Governors. Alphabet stock, or Google, rose again a day after hitting a 1 trillion market cap. So now we have Apple, Microsoft, and Google at the $1 trillion figure. And there is poor little Jeff Bezos and Amazon being left out. We'll see. Maybe he won't be left out for long. So let's take a look. As you watch this video, the S&P 500 has now had 70 straight days without a 1% loss. Is this such a surprise since the Fed started re-expanding its balance sheet? Probably not. But in case you're wondering, the period before the February 2018 crash was 112 days without a 1% move. So we have 42 trading days to go. And an update from Bank of America. As of the end of 2019, and as this chart shows, the S&P is overvalued on 19 of 20 metrics. Only the price to free cash flow is marginally below average. And I'm sure we'll solve that soon. But just remember, the quote from Muhammad Ali is float like a butterfly, sting like a bee. So be careful and watch out for that bee. So let's take a look at our charts. And we're looking at the 3-year weekly chart on the spiders, the SPY, the close on Friday, 331.95. And I'm going back 3 years because I want to capture the time frame here in late 2017 that showed the melt up. And I've drawn these very basic channels here. There in late 2017, here in mid 2018, and then the current time frame. The lines, I'm not making them parallel. It isn't a perfect channel. But it does go to show that the melt up that we had in late 2017 was fairly structured, at least up until we had this blow off move here. And then again in mid 2018, we had a pretty good, very short melt up here. And then we're having the current melt up, moving on up. Very structured move. And as I had said in the earlier intro, or perhaps the first segment there, we've had 70 days in a row of no movement of more than 1%. And that's pretty unusual when you string together a whole bunch of those. So the way it looks here in the Mac is it's not all that easy to see these, but when you match a price chart with the Mac, you can see them. So we headed up here, and we headed up here, and then we kicked up. In mid 2018, that was it here. And then the current time frame, we're heading up like that. So very narrow, not much separation between the fast line and the slow line on the way up on any of these here. There. Now this is different here. There's a bit more volatility or variation between the fast line and the slow line. And that simply is an effect or the recurrence of that downward crash at that point in time and then the rebound. That's a little bit different than a melt up. We did have this downtrend here, but we recovered after a couple of months and then started another melt up. So that is a different circumstance than we had here. And certainly the current circumstance is quite different. The way it shows up in a histogram is a relatively low rise in, again, the separation. And here you had it here until you had that kick up at that point there at the very end. And then this one here, this melt up, very low rise there. Again, this would not qualify simply because It was the downtrend and then the rebound. So quite a bit of a bounce back here. Now the current one, again, a relatively low rise with not much volatility. Now here into the price rate of change, we do have this kick up to this point here, which is to 37.60, and that's the second highest that we've been. The last time we were here was there in early 2019, and then again early 2018 we got to that point. So at least by the price rate of change, we're within range of where we were in these other two periods. So be on the watch out. Here in the RSI, you can see that the move in mid to late 2018, that's very structured. It doesn't have the volatility as the volatility that you saw, say, in this time frame, or even in this time frame or this time frame. So once again, we have this structured move on up, not much volatility. Now, here in the stochastic, same sort of thing. The move is on up, and then in this time frame here, you have the fast line and the slow line intertwined and moving together. Same sort of thing that you have here. They move close to one another, and then they intertwine, and then they just keep moving sideways. That's your melt up. And it's very difficult to say when this thing's going to end because it doesn't have any volatility to it. It's so structured, it's very difficult to pinpoint that. So we can't do that. All we can do is try to be prepared, be patient, and be prudent. Volume looks fine. And then the Williams, once again, we stay up here in this upper territory. It doesn't have as much volatility as it did, say, here. Even here, see, these periods have a little bit more volatility, not much. But then the melt up there in late 2017 into 2018, you had even less volatility. So that's what we're facing. All you can really do is sit on the sidelines and watch and wait. Back up here to the price chart, and it is going to end. I will guarantee you that. When? Can't really say. I just think that we are closer to the end than the beginning. So just be patient. And for today, that's ChewDog Charts. Thank you.